Howdy, folks. Your skipper here, Darius Dale, here to present our macro minute for Monday, May 2nd, 2022. Back from vacay and back home. Asset markets, starting with markets, we have stocks mixed this morning with European equities lagging, commodities down, crypto mixed with Bitcoin leading, dollar up, global bond yields down, market moving headlines. So a lot going on from a geopolitical risk perspective. The EU is set to propose a ban on Russian oil by year end. But Hungary vows to veto it. Obviously, they got Hungary's prime minister is very close to Putin. EU ministers will hold an emergency meeting today to discuss the gas situation, which you might actually argue is incrementally more important than the oil situation, but they are obviously incredibly important. Russia supplies pretty much the lion's share of Russia of energy across the continent. Russian Foreign Minister Sergei Lavrov, he reiterated tripling down on this concept that foreign payments for Russian gas will they will have to be converted into rubles in order to or other countries will have to pay for gas in rubles. And then I thought this was a pretty interesting statement. You had Germany's foreign minister came out and said sanctions can only be lifted once Russian forces leave Ukraine, and that includes Crimea, which they annexed going back 6 years ago. So that's a big deal. It tells you that we're not on a path to removing these sanctions. And in fact, it's going back to what the EU is proposing today. We could actually be getting incrementally tighter, which would obviously be a bigger drag on growth globally, obviously with Europe being at the epicenter of that. Shifting gears to Asia, yet Chinese regulators held emergency talks with local and foreign banks on how to protect the nation's FX reserves and overseas assets from sanctions, U.S.-led sanctions from those similarly imposed upon Russia. China is concerned. Sorry, I have to read this. China is concerned it may face the same measures in the event of a regional military conflict or other crisis. Holy cow, that sounds like Taiwan. They're preparing to invade Taiwan. They're doing their checks. They're doing what they need to do to make sure that they themselves don't sort of suffer the same economic consequences as a function of U.S.-led sanctions. That is terrifying. We talked about this on the program. We've talked about this in our research of the rising probability that China takes advantage of this very precarious geopolitical situation in which the West is very much dealing with a lot going on, from an inflation to obviously the Russian-Ukraine situation. This is a perfect opportunity for China to take a step forward from a geopolitical dominance perspective and flex their muscle and might in the South China Sea. That's pretty scary. That's going to be a problem for asset markets and the whole global economy if that takes place. So keep that risk front and center on your radar. Speeding up a little bit. So G came out last week. I want to say on Thursday or Friday. Promised to stick with the current economic targets, despite sort of also sticking with the zero COVID policy. So that implies we're probably likely to see some sort of fiscal stimulus initiatives on the other side of the lockdown situations in Shanghai and potentially Beijing, which continues to get incrementally kind of more precarious. And then lastly, we have a huge macro meek in the middle of earnings season. So today we're getting ISM manufacturing headline. ISM manufacturing kind of headline the data we get today. Tomorrow we get JOLTS data and the auto sales data for the month of April as well. On Wednesday, obviously the main event is the Fed FOMC meeting, where we're likely to hike 50 basis points and kind of outline and really put the final stamp on the quantitative tightening program, although the minutes kind of gave us the look-see on that. But more importantly, or not even more importantly, but certainly as important, we're getting to the Treasury Borrowing Advisory Committee's quarterly refunding document. We'll talk about all this stuff in greater detail in our lead-off morning note, in addition to the evolving outlook for Chinese policy. So stay tuned for that for more details. But then we also got on Friday, we'll have the compendium of Fed speak after the payrolls report. And so if we see incremental tightness from a wage perspective and unemployment rate perspective in the labor market, we're going to get incrementally hawkish commentary out of these folks. So it may be the case that whatever Powell says on Wednesday might actually get incrementally hawkish on Friday by Friday, just in terms of that. So be aware of that. We could have another nasty Friday like we saw last week. But from big movers perspective today, we got Shanghai Composite up 2.4%. It's down to down minus 1.3% week over week. WTI crude oil minus 3.1% to 3.2%, up 3.2% week over week. Gold is minus 0.9% to minus 0.9% week over week. And then lastly, Bloomberg Agricultural Index minus 0.9% today to flat week over week. Shifting gears to our volatility adjusted momentum signals and probable range analyses. US dollar index, that is still bullish, fams. You got minus 0.4% of downside versus 2.4% of upside in its probable range. Or sorry, 0.4% of upside versus 2.4% of downside. Sorry, I got that backwards there. Gold neutral VAMs, you got so it's at the lower boundary of its probable range with 5.6% of upside there. 10-year nominal Treasury yield, bullish VAMs still. You got minus 19 basis points of downside versus 27 basis points of upside. High yield OAS neutral VAMs there, overbought there with 69 basis points of downside in its probable range. S&P 500 bearish VAM still minus 3.3% of downside versus 6.6% of upside in its probable range. VIX is still neutral VAMs there. It's at the upper boundary of its probable range with 43% of downside there. NASDAQ bearish VAM still with minus 5.4% of downside versus 8.6% of upside. Russell 2000 bearish VAMs minus 3.9% of downside versus 7.5% of upside. Bitcoin bearish VAMs minus 10% of downside versus 7% of upside. Ethereum bearish VAMs still too, minus 10% of downside versus 9% of upside. Kind of fair fight there. Shanghai Composite bearish VAMs still moving on to the upside, but obviously a terrible looking chart. We'd like to see some more improvement before we can really get behind the sort of the rhetorical easing that the Politburo and PBOC continue to do. But you got minus 5.1% of downside versus 4% of upside. WTI crude oil, neutral VAM still minus 8% of downside versus 11% of upside. Still trending higher though, for the most part. We'll see. I mean, this is kind of a make or break week or make or break series of weeks for WTI for the energy trade itself. Because again, if we violate some technical levels, you're going to start to see more and more calls for demand destruction amongst the trader community. And then lastly, ag, no demand destruction. People still need to eat. Minus 1.9% of downside versus 4.1% of upside. Industrial metals definitely seeing demand destruction there. Neutral VAMs, it's oversold with 9% of upside to the upper boundary of its probable range. So with that, Darius Dale presenting our macro minute for Monday, May 2nd, 2022. Went a little long today, but obviously been gone for a couple days. So I just want to make sure everyone's kind of seeing the same things that we're seeing here over at 42 Macro. And then stay tuned for our leadoff morning note. We'll unpack a lot of these key macro topics. Huge week for markets. If Powell doesn't give us the dovish breadcrumbs, could be look out below. Could see a 3 handle on the S&P 500. So with that, see you guys next week. See you guys tomorrow. And have a great day today.